So generally, I would think that it's a good practice that you attach a certain percentage risk of your total equity to each trade that you execute. Okay, and the reason is that it will be very easy for you to quickly just offhand know what is your portfolio risk, what is a potential drawdown you could actually potentially have. So the biggest problem with most new traders especially, and I would say that it's because they didn't understand how important it is to know how to manage the risk and position size properly. That is actually the biggest problem. But once you understand why you need to position size and need to think about risk management, then if you follow a certain percentage, for example, generally what I've noticed is that for intraday traders, they tend to risk less than 1% on each trade that they open up. What does this mean? This means that if, let's say, as a trader, if I decide that if I open this trade, I am going to risk a maximum of 1% only. This means that if I enter the trade and the entry price, if it touches my stop loss and I get out, my loss that I incur for this position that is closed is only 1% of my total equity. So you need this percentage as a starting point for all the positions that you are going to open and close. All right. For intraday trader, usually it's much lesser than that. From what I noticed from all the people that I've spoken to, usually it ranges from about 0.5% to even 0.1% of each trade.